Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier on recovered from the recent low of 21,750 points. Since then, we did see the Dow continues to climb higher, forming the higher high, higher low position towards the 25,500 points level. But since then, we are seeing a 3-day of pullback on the Dow Jones. Could be the healthy pullback following a very sharp rally from the 22,500 points all the way towards the 25,500 points level. This could be a healthy pullback for now towards the 25,000 as the Dow Jones formed a hammer candle on last Friday. So this could be taken as the breakout pullback and the continuation pattern for the Dow Jones. Firstly, to retest the previous peak of 25,400 points towards the next resistance, which is located towards the 26,000 psychological level. In the meantime, the 25,000 will serve as the immediate support level for now, but once the 25,000 level fails to hold, then the next support will be located towards the 24,250 points. The recent pullback was mainly stemmed by the renewed trade uncertainty between US and China after US President and also China's president will not be meeting each other prior to the trade deadline in March. Similarly, on the S&P 500, we are seeing the S&P 500 has earlier recovered from the 2350 towards the 2740 level. Since then, we are seeing a healthy pullback for now on the S&P 500. So this could be taken as the breakout from the 2600 towards the 2740, a healthy pullback towards the 2700 just towards the EMA 120 level, and the potential continuation pattern for the S&P 500, firstly to retest the previous peak of 2740, or even towards the 2800 psychological level on the S&P 500. In the meantime, the 2700 will serve as the immediate support level for now, followed by the 2600 on the S&P 500. Okay, some of this on the crude oil prices. The crude oil prices continues to trade on a sideways manner following the recovery of the 42.50 towards the 55 US dollars barrel mark. Since then, we are seeing a healthy consolidation on the crude oil prices. Early on, crude oil prices has been hovering between a sideways manner as well between these two bands during the mid of November towards the mid of December. Once again, it has been hovering between these two bands as well. For now, let's monitor for the breakout on either way. If there's a breakout above the 55 and a closing above that, then we could expect for the upside on the crude prices back towards the 60. But if the 50 level fails to hold, then we might see further retracement on the crude prices back towards the 47.50 level. So crude prices is just traded on a sideways manner for now. Okay, some of this on our local front. The FMKLCI continues to trade on a sideways manner following the recovery on top of the 1630 level towards the 1700. Since then, we are seeing several rejection along the 1700 psychological level. So the 1700 psychological level will serve as a very strong resistance level for now. On the FMKLCI, we think that the key index will likely to continue to linger between the 1665 towards the 1700 psychological level until we can see a firm breakout above that and the follow through by interest beyond the 1700. Then only we can confirm for further recovery towards the 1740. In the meantime, the 1665 will serve as the immediate support level for now. If you look at the MACD histogram, it has been turning on a sideways manner of flattish over the past couple of days. So the FMKLCI will likely to just consolidate until we can see further leads that can move the FMKLCI upwards or downwards over the next coming days or weeks. On the low liners wise, the FM small cap index has earlier recovered from the 10,900 points level. It has surged towards the 12,300 points or towards just the EMA 60 level. It has rejected the EMA 60 level on several occasions, but recently on last Thursday, we are seeing the FM small cap index has managed to breach and also close above the EMA 60 level. And on on Monday, Friday, we did see the FM small cap index has seen a follow through by interest beyond the EMA 60 and also breaching above the 12,300 points level. So for now, on the FM small cap index, we might be seeing further rotational play among the lower liners towards the 12,000 800 points level. That will be the immediate resistance level for now. On stocks wise, some of the stocks that we can watch out for firstly will be Gabungan AKRS. Gabungan AKRS has earlier formed the double bottom formation along the 66 or 70, around the 70 cents level. It has recently recovered from the recent low of around the 66 cents towards the recent peak of around the 1 ringgit and 21 cents level. Since then, we are seeing a healthy pullback on the Gabungan AKRS. This could be taken as the breakout, pullback, and the continuation pattern for Gabungan AKRS that recently we are seeing a short-term consolidation breakout on top of the 94 cents level, accompanied by some of the improvement in volumes being traded over the past couple of days. So this could be the breakout, pullback, and the continuation pattern for Gabungan AKRS. Firstly, to retest the 1 ringgit and 6 cents, that will be the immediate resistance for now, followed by the 1 ringgit and 21 cents level on Gabungan AKRS. Your stop loss point will be located below the 87.5 cents level on the Gabungan AKRS. If there's a follow-through buy interest beyond the 94 cents, we could expect the MACD indicator to issue a buy signal. The RSI also could be rising to recover back above the 50 level as well. On our Inari, price is still in a downtrend formation. Any recovery from now will be just taken as a technical rebound play. Price has earlier pulled back sharply towards the recent low of 1.22 ringgit level. It did form the inverted hammer candle on top of the 1.22 ringgit, and subsequently price continues to trend higher, forming the short-term higher high and also higher low formation as price recovered and maintained its position above the EMA 9 level. On Inari right now, we are also seeing the short-term consolidation breakout above the 1.60 cents level on last Friday, accompanied by some of the rising volumes being traded. For now, with the breakout above the 160, we might see further technical rebound play on Inari back towards the 188 or even towards the 2.04 cents. Stop loss below the 1.47 cents level on Inari. Since there's no bullish, no bearish divergence signal at current juncture, we could expect Inari to continue to creep higher, recovering back towards the 188 level. On KUB, price has staged a very sharp rally towards the 53 cents level from the recent low of around the 22.5 cents. Since then, price has staged a healthy pullback, forming the breakout, pullback, and the continuation pattern as price has once again formed a bullish candle on last Friday. On the KUB right now, let's monitor for this to see if there's any follow through by interest for now. Should there be follow through by interest beyond the last Friday's closing of the 43.5 cents, then this could be the potential pennant formation or breakout. This could be the pole, and this could be the pennant shape that we're expecting price to trend back towards the previous peak of 53 cents level. Your stop loss point will be located below the 39.5 cents if there's a breakout above the 43.5 cents level on KUB. On EVIN, price has been on a sideways manner after the recovery on top of the 49.5 cents. The 49.5 cents is a very strong support level. It has earlier retested the 49.5 cents once during the mid of October. Once again, during the mid of December, it has retested the 49.5 cents. And subsequently, price has recovered. It has earlier rejected the EMA 120 level on several occasions. It rejected once here, twice, and the third time here. But recently, on last Friday, we are seeing a breakout above the EMA 120 or the 60.5 cents level on EVIN, accompanied by some of the improvement in volumes. With the breakout above the 60.5 cents, we could expect price to continue to trend higher, firstly towards the 66.5 cents, towards the 70 cents level. Stop loss will be located below the 56.5 cents level on EVIN. Things appears to be quite positive on EVIN right now, as you can see that the EVIN has been forming the higher high and also the higher low formation on the MACD indicator. The RSI has been maintaining its stance mostly above the 50 level over the past 1.5 months trading period. Last two companies for today, firstly will be revenue. Revenue has earlier recovered towards the recent peak of around the 1.46-47 cents level. Since then, price has staged a pullback towards the 1.07 cents, forming a hammer candle. Subsequently, price has managed to recover. It rejected the EMA once EMA 60 level. But on last Friday, we are seeing a bullish candle was being formed as price recovered above the EMA 120. So for now, this could be the potential flag formation breakout that we're going to monitor to see if there's any follow through by interest beyond last Friday's high of 122. Should price breach above the 122 level, then this could confirm the flag formation breakout that we are expecting price to trend towards the 125. That will be the intraday target, followed by the 131 or even towards the 135, stop loss below the 1 ringgit 18 cents level on revenue. Should that be a follow through by interest for flag formation breakout above the 122, we could expect the MACD indicator to issue a buy signal. RSI could be rising back above the 50 level as well. Last company for today, lastly will be Bawes. Bawes has been also on a recovery phase following the recent low of 32.5 cents level. Since then, price has been forming the higher high and also the high low formation over the past 2 months trading period. For Bawes right now, let's monitor to see if there's any follow through buying interest beyond the 51 cents. Should price breach above the 51 cents, price might see further recovery back towards the 55.5 or even towards the 59 cents, stop loss below the 47 cents level on Bawes. If you have any questions, you can put in the chat box. I'll reply you shortly. There's some question on WCT and Econ. On WCT, earlier we did see a very sharp rally from the after the consolidation record above the 71 cents towards the 85.5 cents level. Since then, price has staged a pullback and traded on a sideways manner with not much of the trading interest over the past couple of days on WCT. We might see price just trend on a sideways manner between the 80 towards the 82 cents level until we can see a breakout and a closing above the 82 cents. Then only you can confirm price to head back towards the 85.5 cents or even towards the 96 cents level. So stop loss point will be located below the 80 cents. But over the near term period, we might be expecting just a sideways manner. Already you can see that the MACD indicator has already issued a sell signal recently. RSI is really trending lower. So with not much of the buying interest over the past couple of days, we might just see a sideways manner on the WCT right now. Until we can see a firm breakout, only we can confirm further recovery. On our Econ price has been taken a beating towards the recent low of 36 cents a level. Since then, price has recovered towards the EMA 60 or the 53.5 cents a level. Since then, price has staged a healthy pullback. This could be a healthy breakout, the pullback just towards the near the EMA 120 level. EMA 20 level, forming a hammer candle, and the recovery was confirmed over the past 2 days as price formed a 2-day bullish candle. This could be the potential breakout pullback just towards the 42.5 cents, and price will likely to stage further recovery back towards the 53.5 cents level. The first target price will be located towards the 50 cents. That will be the immediate target price for now, followed by the 53.5 cents. Stop loss below the 42.5 cents level on Econ. If there's no further question for today, then we'll end the morning briefing. Thank you.